The current live price for BigBear.ai Holdings Inc. on the NYSE is $8.655 per share, marking a substantial gain of over 19.7% for the day, as of 1:08 p.m. Eastern Time. Now, a rally like this often screams momentum trade, just another volatile AI stock riding the hype cycle. But what's truly driving this surge is something far more immediate and concrete than mere speculative froth. A new partnership announcement dropped just this morning that directly addresses one of the market's biggest lingering concerns about BBAI's execution. We're seeing a direct, real-time response to news that BigBear.ai has partnered with T-Second to deliver AI-enabled edge infrastructure specifically for battlefield applications. This isn't just another press release about a future aspiration. It targets the core government and defense sector where BBAI needs to prove its lasting value. And more importantly, it offers a tangible solution to a growing, well-funded customer base. The expectation for BBAI has long been this idea of a high-growth AI contractor, but the reality was a struggling stock price earlier this year following disappointing Q2 earnings that showed slowing revenue growth and significant guidance cuts, largely due to contract disruptions in Army programs. Today's action is a powerful indication that investors are starting to look past that Q2 hiccup and focus intensely on the company's strong contract backlog and its ability to secure new high-profile collaborations that validate its technology in mission-critical environments. The trading volume today is explosive, exceeding 109 million shares, which is an astronomical figure for a stock with a market capitalization hovering around $3.2 billion. This kind of volume relative to the float, especially when accompanied by a nearly 20% price spike, tells you that not only are retail traders using platforms like Robinhood or SoFi Invest piling in on the momentum, but institutional players are also making significant moves. Look at the intraday chart. The stock opened higher at $7.60, consolidated a bit in the $8.20 to $8.40 range midday, and is now pushing back towards its daily high of $8.74. This upward consolidation, rather than a quick sell-off after the open, suggests underlying buying pressure is being sustained by the belief that this T-Second partnership, combined with the earlier announced U.S. Navy UNITAS 25 maritime exercise collaboration, signifies a major rebound in government contracting momentum. The key tension here is between the investor expectation of smooth exponential growth from a defense-focused AI stock and the reality of their recent financial performance, which showed an 18% year-over-year revenue decline in Q2 2025. That revenue dip and the corresponding cut to full-year guidance, down to a range of $125 million to $180 million from a previous $160 million to $180 million, was a major psychological blow. Yet the price action today and over the last few weeks is indicating that the market is willing to forgive short-term financial pain if the company can demonstrate continued technological validation and high-value contract wins, especially in the national security space, which is less susceptible to broader economic slowdowns than pure commercial markets. For an individual brokerage account holder using a platform like Fidelity or Interactive Brokers, the question isn't just about the price point hitting $8.65 today. It's whether this price point is merely a local peak on a wave of news or a new baseline that reflects genuinely improved fundamentals. Delving into the financial reality beneath the current surge, it's important to remember that BBAI is far from profitable, reporting a substantial net loss for Q2 2025. This keeps the PE ratio in negative territory, which is typical for a growth company, but highlights the high-risk, high-reward nature of this investment. The company's value proposition is tied directly to its technology becoming integral to government operations, much like Palantir Technologies, another government AI player. BBAI's core business revolves around providing AI-powered decision intelligence solutions, largely to U.S. government agencies, defense, and national security clients. Their platforms, like Conductor OS and the Veriscan biometric system, are designed to synthesize vast amounts of data for predictive insights and enhance situational awareness. The recent contract activity backs this up. The Navy's UNITAS 2025 exercise participation in September showcased their AI-powered sensor fusion, and the deployment of Veriscan at Nashville International Airport, also in September, illustrates their successful, albeit smaller scale traction in critical infrastructure outside of pure defense. This dual market focus, government and critical commercial infrastructure, is a central part of the long-term bullish narrative. The question that separates the short-term traders from the long-term holders using their Schwab Intelligent portfolios or managing their Fidelity IRAs is whether BigBear.ai can translate these impressive technological demonstrations and backlog strength, which was reported at $380 million in Q2, into consistent, positive operating cash flow. The company did end Q2 2025 with a healthy $390.8 million in cash, which provides a significant buffer for continued operations and M&A activity, which is critical for a non-profitable, high-burn-rate tech company. The recent flurry of news in October, including today's T-Second partnership, comes at a crucial time. With the Q3 2025 earnings report estimated to be due around early November, investors are highly sensitive to any developments that might signal a stabilization or reversal of the negative revenue trends seen in Q2. Consensus analyst estimates for Q3 anticipate a loss per share of around negative $0.06 on revenue of approximately $35.55 million. A beat on either metric, particularly on revenue or an improvement in gross margin, could ignite another significant leg up for the stock, as the market is clearly looking for a reason to be optimistic, as evidenced by today's movement. However, a miss would likely lead to a sharp sell-off, reinforcing the bearish view that the growth story is fundamentally fractured. For those who utilize active investing strategies on platforms like Interactive Brokers trading platform, the implied volatility for BBAI stock is a major factor, reflecting the extreme swings we've seen this year where the stock surged over 80% year to date before its recent dips and rallies. This kind of volatility is a double-edged sword, offering incredible opportunities for quick trading but presenting significant risk for passive holders. Looking ahead, the future of BigBear.ai stock is fundamentally tied to its ability to secure major, long-duration government contracts that replace the revenue lost from the disrupted Army programs. The market is constantly weighing the long-term secular growth tailwinds of government AI spending against the immediate risk of customer concentration and inconsistent execution. Compared to larger players like NVIDIA stock, which benefits from broad GPU sales across industries, or Apple stock with its massive stable consumer base, BBAI operates in a much more niche, contract-dependent space. The government's push towards physical AI and agent systems, as highlighted by management, suggests a strategic focus on integrating their technology into real-world mission-critical systems, which could lock in highly sticky recurring revenue streams. This is the narrative that could genuinely exceed current expectations. Conversely, if new contract wins slow, or if the government opts for other established defense contractors or larger AI firms like Palantir, BBAI could struggle to justify its current valuation, which, despite the price cut in guidance, still trades at a high forward price-to-sales multiple. The market is essentially valuing the potential of their technology portfolio and their $380 million backlog more than their recent earnings struggles. The final quarter of the year, culminating in the Q3 earnings report, will be decisive in determining whether today's rally is a true turning point or just another volatile spike in a high-risk microcap name. The recent insider selling activity, though relatively small in volume, is another piece of data that complicates the bullish narrative. It's a reminder that even company executives are taking chips off the table following major price surges. To truly gauge investor sentiment on this highly volatile stock, I want to hear from you. Comment below how many shares of BBAI you currently hold or what price point you would consider initiating a position in BigBear.ai. Your perspectives on this stock, whether you're trading on Robinhood or managing your long-term allocations with a Fidelity brokerage account, are essential to understanding the collective market psychology around this name. In summary, the overwhelming expectation for BigBear.ai is for it to be a pure-play AI growth story, but the recent reality was a severe disappointment in Q2 2025 revenue and guidance. Today's massive price surge of nearly 20% on the back of a new defense partnership with T-Second, following the Navy UNITAS 2025 collaboration, signals the market is aggressively betting that the company has course-corrected its sales momentum. The conviction is strong enough to push the stock to $8.655, validating the technology's worth in the eyes of investors and creating that tension. Is the market right to ignore the past financial miss and focus on the future contracts, or is this simply a volatility-fueled short-term spike? The answer lies in the Q3 results and the continuous flow of contract announcements, which will ultimately dictate if this is a fleeting relief rally or the start of a sustained move towards new highs. The company has cash, validated technology in the defense space, and an improving news cycle, but it remains a classic case of an innovative company where the valuation is heavily dependent on future contract execution in a highly
highly competitive government contracting environment, a world away from the steady growth of companies like Tesla stock or the stable consumer base of Apple stock. The risk is high, the excitement is palpable, and the execution is all that matters from here.